This is our Forex blog for October 18th, 2012, and this is our new and improved currency meter. And some people are going to prefer this one, some people will prefer the old one, which looks like this. The old one shows you the statistical strength or weakness of each currency, just like the new one does, but the new one allows you to weight some of the longer time frame trends into one reading. The yen up here on the top shows the real-time strength or weakness, which is made up of multiple different tools. Some of them measure the percentage of direction the yen's going up or down versus, and other ones measure the intensity of that direction. Underneath that, we have the 15-minute trend, hourly, daily, weekly, monthly. Now, the more time frame trends that are going down, the more likely the yen is to go down. But you're going to have some days where some of the trends are going up, like the euro. 15-minute, hourly shifts up, the daily trends down, the weekly, monthly trends up. I've been told by some new traders that it's confusing when looking at the New Zealand here. The real-time trends down, 15 hourly trends down, the daily and weekly are just barely up, and the monthly's down. So instead of looking at a more complicated version of that, you get just one indicator reading, which allows you to set this however you want, or you can use the default settings. I give only 4% weight to the monthly trend because it's very slow in changing direction, 13% to the weekly, 18% for the daily, and 65% of this momentum is very, very fast real-time trend strength. So it allows you to look at this and say, okay, the yen is clearly the weakest one today. Let's scroll back a little bit here. You can see starting the day, the Australian is very, very strong. So what would you want to do? You'd want to focus on looking for buys in the Australian yen. It's that simple. And, you know, compared to looking at the other one where the yen starting the day off had a little bit of a couple hours of weakness, a little bit of strength right here, but the daily, weekly, monthly is blood red. Do you anticipate buying this because of the strength or because of the longer term trend? Do you sell it? It's a lot simpler to just look at this, and you can see that that strength is minimized here because of all the longer time frame trends that are down. It does not make you think about buying, right? So looking at the Australian yen, let's bring up a chart. So looking at this chart, we're focusing on buy signals. You can see a lot of strength here starting the day off. The pullback had a little bit of weakness. You got a buy signal from one of our entries, and always look at the real-time momentum when you get a buy signal. You can see the weakness all of a sudden fell off a cliff. It's not a bad buy. You get in, and unfortunately there's a counter trend sell signal right here, which you can decide whether to take or not take, but it is a good warning system to let you possibly know to get out of your trade with a small win. As you see here, it went up without that much strength. Now, the individual charts, I recommend having much faster settings for the build your own trend and then keeping the longer time frame trends here. We're only using a one indicator reading of all the time frames just for the currency meter to help us identify the currencies to trade. This one here, as I bring it up, you'll see does not have any weighting for the daily, weekly, monthly. I'm also not weighting the 15 and hourly at all. It's just super fast real-time trends. So you can see when a downtrend shifts to an uptrend right here, it's very early into the trend. Now, a lot of times when currencies are up too much, they make a two-wave pullback. You draw your fibs off the first wave right here. Usually the fib targets are a good place to get in. Anytime the more you know about trading, the easier and easier it gets. Most new traders, you know, there's 50 to 100 things they don't know. It makes them buy when they should be selling, or trading when they should be doing nothing, or, you know, passing a very high probability trade that does not look good to them. This is a very, very high probability trade for many reasons. One, very strong trend up. Two, it's a two-wave pullback. Three, it hits the 1.382 fib target. Four, it hits the moving average, hourly moving average, which tends to be a good signal. And then there's also a monthly pivot right there, and it's a whole number. Whole numbers and half numbers tend to have major buy orders there. You know, coming down to it from below, there tends to be buy orders there. So for those many, many reasons, this was a very high probability trade, and you can see our FX trade signals caught it too for one of those many reasons. I'm not sure which one that this signal was. But because this is one we're looking to buy, you get in, and you can see it rose from 82 all the way to 82.50. And if you missed that trade, and in all probability, you would have got in this trade. You never know if it's going to go back above the previous day's high, but it does, and it has pretty decent strength on the way up. Here's a counter trend signal. I probably would get out of this trade when it goes 1 pip underneath that low. And then we got a 2-bar pullback with a wick. This is one of those currencies that's the strongest, so you can take, it's a relatively low probability trade with only a 2-bar pullback. I prefer 3 to 5 bar pullbacks, and this one is obviously up near the upper containment bands and has less room to run than this one does. The more room to run, the better the trade. But this is another very high probability trade, and it goes up 30 pips. So by, our 3-step easy Forex trading system is use our new and enhanced currency meter, which gives you one rating of all the currencies, very easy to look at, no confusion. All the time frames are given what I consider a proper weighting. I'm only using the monthly weight of 4% and a little bit more for weekly, a little bit more for daily. The vast majority, pretty much 2/3 of it, is real-time momentum. Now, later in the day, let's see what was a good trade. Let's say you start trading around 5 or 6. Well, the yen looks pretty good. Swiss is also very strong. The yen is still weak. So let's take a look at the euro yen. We're looking to buy. Okay, so later in the day, 5, 6 o'clock, you can see this one had already trended up very nicely. Typically, you're going to want to wait for a 2-wave pullback before you get into these trends. We're very close to it. So, I would have pretty much ignored maybe some of these buy signals up here. This one, went up about 8 or 9 pips. This trade here went up about 20 pips. And I mean, just a slightly higher high. Usually when currencies make just a slightly higher high, you're going to need a deeper pullback. Again, the first wave from here to here, this is the very high probability place to buy because it's a 2-wave pullback right to the fib target. So the counter trend buy signals that show up right here, circles are counter trend trades. You get in, and you can see this, starts to work its way back up, goes up about 20 pips. Earlier in the day, when it's above the hourly, you focus on buys. You can see this buys trade right here works. This one works. We also have all of our point of control signals in here. The daily, weekly, monthly value areas, if a price comes down to it and has certain chart patterns, it's going to show you a buy signal right there, which they tend to be very high probability. I've yet to put in the fib targets into the signal code, but usually I spend 30 or 40 minutes every night doing Fibonacci analysis for my own trading so that you don't have to and I don't have to during the day. These areas are very likely reversal areas, and anytime you get a double top at a fib target, it's a very high probability trade. So, if you would have got into a trade up here at 104.10, you could have made about 40 pips on the pullback there. You always want to watch it in real time as well. If it's pulling back with not that much weakness, move your stop down. Right here at this point, it's got a lot of weakness. Anytime it's above 80 in red, and you start seeing some buys, counter trend signals coming in there, I'm going to put my stop right there. I'd be out of this trade somewhere around right there. So, using the currency meter to summarize this, it lets you focus on the absolute best currencies. Now you can see here at 8 o'clock, the CAD's very weak. The Swiss is pretty strong. So selling the CAD Swiss is a good one. Now I don't typically leave the CAD Swiss running, so let me bring up a regular chart, 5-minute chart. 8 o'clock's right here. Here's 8 o'clock. This is it just breaks down through the low. It's not a bad trade. I prefer pullback trades. This is a really ugly pullback. This one right here is a much better pullback where it kind of goes up and it's kind of going sideways, barely making higher highs and breaks down. This is an example of a pullback I'd take. This is one of the ugliest pullbacks I've ever seen, and this barely meets the criteria for a pullback. I want a decent-sized pullback. So if a currency, let's say, moves 100 pips a day, I want a 15-pip pullback. If a currency only moves 70 pips a day, maybe 10 or 12 pips. I don't want to get into a trend when it's only gone up 5 pips off the low. That's very risky. This one right here, barely meets the criteria. It goes up about maybe 12, 13 pips max from the low of this bar to the high of this bar. But you can see currency meter had you looking at this, and the Swiss was strong even before this one got weak, and that's why it was kind of inching its way down beforehand. Let's take a look at any other currencies we might have. We have some strength coming in New Zealand here. The CAD's weak. You certainly at 11 could look to buy the New Zealand CAD. Here's 11 o'clock. It breaks out right here and goes up. You got this nice little pullback. Again, a decent sized pullback. Usually when it breaks out over the trend line, it's a decent place to buy. That one went up about 15, 20 pips in the first trade. Continued on as well. So that's how you use the new and enhanced currency meter. You're certainly welcome to use the old one. Just weight the real-time ones with 100% of the weight, and do not use the daily, weekly, monthly, or the 15 or the hourly in that, and you'll have a very fast but oftentimes jittery currency meter. I traded with this probably for about 8 months. I'm used to it. I pretty much try to find currencies that have extreme weakness on all time frames, but there's no doubt that this one is just easier, and I'm trading with it now myself just to get used to it. And I find the only drawback to this is when trends change, they tend to show up maybe 15 to 20 minutes late, sometimes 30 minutes. But for the most part, trends in the currency markets tend to continue, and when the daily, weekly, monthly trend is all in one direction like the yen is, this clearly lets you see that this is the one that you should be selling. You wouldn't consider doing a counter trend trade in, let's say, the euro that's strong versus the yen that's weak. You wouldn't want to sell the euro yen. You'd want to focus on buying. And that's going to keep you out of losing trades and low probability trades. And the trades that work are going to be significantly bigger than the trades that do not work and you lose money on. And that's the key to trading. Small losses, 5 to 10 pips, lots of break evens, lots of 2 and 3 pip losses as you move your stops up. You get into a trade, it goes up 5, 6 pips, move your stop in half, you got 4, 5, 6 pip loss. At that point, it goes up a little bit more, you move your stop up, you might have a 3 pip stop now. Keep your losses, whatever you can do to yank your stop up so you lose tiny, tiny, tiny amounts when you're wrong, and when you're right, scale out of your trade or, look for 20, 30 pip or bigger moves.